Hello students, in present video I am going to explain about 19th problem from final accounts topic. I am taking this question from Pankaj Publications book. See the question. From the following particulars extracted from the books of Durvasulu, prepare trading account and profit and loss account for the year ended 31st December 2013 and a balance sheet as on that date. So on 31st December 2013, we have to prepare final accounts. And here owner name is Durvasulu, means single owner, means this is sole proprietorship business. So for sole trading concern, at the end of the year, final accounts he is asking. In question, he gives trial balance. So trial balance rules you have to keep in mind. Debit side, assets, expenses, losses, drawings. Credit side, liabilities, incomes, gains, capital. Below this trial balance, he is giving some adjustments. Adjustments means what? The amounts which are not considered while preparing accounts are separately given in the form of adjustments. So by taking this trial balance information and adjustments information, on 31st December 2013, we have to prepare final accounts of Durvasulu. So final accounts contains three things: trading account, profit and loss account, and a balance sheet. Trading account, profit and loss account. These two accounts we have to prepare in one table. Balance sheet we have to prepare in separate table. So observe the headings. Trading account, profit and loss account means what? These first two things are accounts. So account format we should draw. Account is divided into two parts now, debit side, credit side. So center line, left side particulars amount, right side particulars amount. If you recollect ledger lesson, their account format is what? Debit side date, particulars, JF number, amount. Credit side also date, particulars, JF number, amount. But in this final accounts lesson, date column, journal folio number column we need not to draw. So debit side, particulars amount, credit side, particulars amount. To indicate that this is debit side, DR symbol we should write. Right side, CR symbol to indicate that this is credit side. And the heading is trading account, comma, profit and loss account of Durvasulu for the year ended. In trial balance, date is given as 31st December 2013. No? That date we have to mention here. Before starting this final accounts, you should know some basic points about this topic. See final accounts. Why owner prepares final accounts? So from 1st January 2013 to 31st December 2013, for 1 year he did business. At the end of the year, he wants to know what is the result of his business. Means whether he got profit or loss in this 1 year transactions. He wants to know. Not only that, he wants to know the financial position of his business also. Financial position means the information regarding assets and liabilities. How many assets he has, what are the values of those assets, and how many liabilities and their values. So by preparing trading account and profit and loss account, owner comes to know about profit or loss in the year. So profit in two stages we want to calculate. By preparing trading account, you will come to know gross profit or gross loss. By preparing profit and loss account, we will come to know net profit or net loss. So gross profit or gross loss is related with the purchases and sales. So we purchased goods and we sold them. So till these sales, the profit which is earned by the firm is known as gross profit. So if purchases value is more than sale value, gross loss comes. This gross profit owner cannot enjoy because from this gross profit, administration expenditure, selling expenditure, advertisement expenditure, etc. he has to subtract. Then only final profit comes. That final profit is known as net profit. Owner is going to enjoy that net profit only. So profit in two stages we need now, gross profit, net profit. That is why first trading account we have to prepare, next profit and loss account we have to prepare. So trading account and profit and loss account. These two accounts are nominal accounts. So while preparing these two accounts, nominal account rules we should follow. What is nominal account rule? Debit all expenses and losses, credit all incomes and gains. So debit side of trading account and profit and loss account, expenses and losses we should show. Credit side, incomes and gains. Then again doubt comes, which expenses in trading account debit side, which expenses in P&L account debit side. Expenses are divided into two types, direct expenditure, indirect expenditure. So direct expenditure on debit side of trading account we have to show. Indirect expenditure on debit side of profit and loss account. Direct expenditure means the expenditure which is incurred up to manufacturing of goods. So direct expenses are related with manufacturing work. Indirect expenses means after manufacturing, the remaining expenses are known as indirect expenses. For example, selling expenses, financial expenses, administrative expenditure, etc. Similarly, credit side of trading account, we have to show incomes now. In P&L account, credit side also incomes. So incomes are also two types, direct incomes, indirect incomes. Direct income means what? Main income of the organization. First trading account now. Trial balance debit side. Stock on 1/1/2013. See, ending date of the year is 31st December 2013. So starting date of the year is 1st January 2013. On that day, we have some stock. This is known as opening stock. So trading account, you have to start with this opening stock. We said we should write debit side. To stock on 1st January 2013, 23,400. So this is account now. Therefore, debit side with the 2 we should start, credit side with the buy we should start. Next, sales returns, not here. Purchases. So firm purchased raw material. We buy the raw material, we bring the raw material into our factory, then we manufacture goods. Means purchases expenditure is before manufacturing now. So this is manufacturing related expenditure, means direct expenditure. So direct expenditure, trading account debit side we should show. Therefore, two purchases and adjustments are given. Therefore, amount in inner column. If adjustments are not there, purchases amount directly in outer column we can write. So what is the adjustment? Adjustment number 2. Purchases include furniture purchased on 30 June 2013 for 1000 rupees. So here in trading account debit side, only goods purchases we should show. Furniture is a fixed asset now. So fixed asset purchases in balance sheet on asset side we should show. But what happened here? In trial balance, by mistake, in this purchases value, they have included this furniture purchase also. So furniture purchase is a capital expenditure. Capital expenditure means what? Rare expenditure. Furniture comes under fixed asset now. Fixed assets, they don't buy regularly. It is a rare expenditure. So capital expenses in balance sheet asset side we should show. Revenue expenses in trading account debit side, in profit and loss account debit side we should show. So purchase of goods, raw material, again and again we buy now. So this is revenue expenditure. So goods purchase is a revenue expenditure that should be shown on the debit side of trading account. But what happened here? Furniture purchase is also included in this goods purchase. So capital expenditure 1000 is also included here. We have to exclude that. Therefore, minus furniture purchase 1000. Then remaining purchase value 1,20,550. Then another adjustment is, see the credit side. Purchase returns are given. So purchase returns always he gives on credit side. Purchases debit side, purchase returns credit side. So these are purchase returns we have to subtract from purchases. So minus returns, purchase returns amount 2,900. Subtract that. Then the remaining purchase value in outer column 1,17,650. Next, carriage inwards 9,300. Carriage means what? transport. So in case of carriage, you have to remember some important points. Carriage means what? When goods are transported from one place to another place, we spend some money towards transportation. No? That is known as carriage. Carriage is of two types. Carriage inward, carriage outward. Carriage inward means what? Our firm purchased raw material or finished goods. So from supplier's place to our factory, our godown, we are bringing that raw material. Here goods are coming into our firm now. So this is known as carriage inwards or carriage on purchases, because while buying the goods we spend this transport expenditure. So after bringing the goods we start manufacturing now. Means carriage inward, nothing but carriage on purchases is direct expenditure, because manufacturing related expenditure. Trading account debit side we should show. Sometimes he gives carriage outwards or carriage on sale. Means what? Goods are already manufactured. After that, our firm is giving free home delivery facility to our customer. So what happened here? From our factory or from our godown, from our showroom, goods are going to customer's house. Goods are going out now, therefore carriage outwards. Otherwise, while selling the goods to customers, we spend this transportation now. That is why carriage on sale. So this is after manufacturing expenditure. Therefore, carriage on sale or carriage outward in profit and loss account debit side we should show. So carriage inward, carriage outward, both on debit side only we should show, because both are expenses. But carriage inward is direct expenditure. So trading account debit side. Carriage outward is indirect expenditure. So profit and loss account debit side. Sometimes he gives only carriage word. Then our assumption is carriage inward means direct expenditure. So trading account debit side only we should show. So remember, carriage, carriage inwards or carriage on purchases. These three words are same. Trading account debit side we should show them. Carriage outwards or carriage on sale. These two words are same. In profit and loss account on debit side we have to show. So here carriage inward is there. Means direct expenditure. Therefore, trading account debit side we should show. 2 carriage inwards 9,300. Next, rent, salaries, sundry debtor, interest on loan, printing and stationery, advertisement, cash with North Bank Limited, investments, furniture, debtor, general expenses, audit fees, and in this page some items. All these items come in profit and loss account or in balance sheet, not in trading account. So ignore them. Come to credit side. Durvasulu's capital in balance sheet it comes, not in trading account. Ignore. Sales. So direct income now. Purchases debit side of trading account. So sales credit side of trading account. So buy sales. If no adjustment is given, sales amount directly in outer column we should write. If adjustment is given in inner column. And in present problem, sales returns are given on debit side. See, second item, sales returns 4,300. So this returns from sales we have to subtract, minus returns. Remaining amount in outer column, 1,40,500. Next, purchase returns already completed, debit side. From purchases we have subtracted. Next, sundry creditor, liability, not here. Loan from Dena Bank, liability. Interest on investment, P&L account item. Discount, P&L account item. Come to adjustments. In these 5 adjustments, only 1 point comes in trading account. That is first point. Value of stock on 31st December 2013 was 39,300. So, 1st January 2013 stock is called opening stock. Opening stock where we wrote trading account debit side. This 31st December 2013 stock is called closing stock. Closing stock on credit side we should write. Buy closing stock 39,300. Next, what to do? You have to observe which side total is more. So credit total is more. In rough notes, credit total we should calculate 1,79,800 minus debit amounts total 23,400 plus 1,17,650 plus 9,300. These three amounts total 1,50,350 comes. Now credit total is more than debit total now. So find the difference. 1,79,800 credit total minus 1,50,350 debit total is equal 29,450. And we said we should write this difference amount where the total is less, that side. So debit side total is less. Therefore debit side, write down this answer 29,450. For this answer, here you have to write gross profit. Why? Because credit side we wrote incomes, debit side expenses. Income total is more than expenditure total. So profit came. That is why gross profit. Suppose debit total is more than credit total. In that case, this answer credit side we should write now. Then in particulars column you have to write by gross loss. Why it is a loss? Because debit side we wrote expenses, credit side incomes. Expenditure total is more than income total. That is why loss comes. So here in present problem gross profit came now. Then two side highest total we should write. Highest total is credit total 1,79,800. Debit side also write down the same. Because difference we wrote now. Now these four amounts if you add, same total comes 1,79,800. With this trading account is completed. Now continuation is profit and loss account. So again need not to write the heading. Already in starting we wrote the heading now. So directly we have to start this in the same table. First this gross profit credit side we should take. By gross profit 29,450 credit side. Suppose gross loss came credit side. Then that amount debit side we should bring. To gross loss that amount. So here gross profit came now. So credit side. Now rules you know now. Debit side indirect expenses, indirect losses we should show. Credit side, indirect incomes, indirect gains. So indirect expenditure means what? After manufacturing expenses. Means these expenses are not related with the manufacturing work. Indirect incomes means what? Additional incomes. Main income is sale. Remaining incomes are indirect incomes. First trial balance debit side we will see. Stock on 1/1/13 in trading account debit side completed, opening stock. Sales returns trading account credit side completed. Purchases trading account debit side completed. Carriage inward completed in trading account. Rent. So only rent word is given. See, a firm may have different types of buildings. First one factory building. Second one godown. Third showroom, office building. So if it is a factory rent, then clearly he mentions that factory rent. So in factory only we manufacture goods now. If factory rent is given, then the meaning is manufacturing related rent. Means direct expenses. So trading account debit side we should show. But here only rent word is given. Then the meaning is it may be a godown rent or showroom rent or office rent. We don't manufacture goods in these buildings now. Means this rent is not related with the manufacturing expenditure. Means this is indirect expenditure. Therefore, profit and loss account debit side we should write. To rent account, there is no adjustment for rent. Therefore, amount in outer column 2,850. Next, salaries 4,650. Salaries to whom we pay? To employees. Employees work in office. So this is office related expenditure. Office expenses are not manufacturing expenses. Therefore, salary is not a manufacturing expenditure. It is indirect expenditure. Therefore, profit and loss account debit side. To salaries. There is no adjustment. Therefore, salary amount in outer column 4,650. Next, sundry debtors. Asset no, not in P&L account. In balance sheet we have to show, ignore it. Interest on loan. Debit side he gave. Meaning is we have taken loan and on that we paid interest. How much interest we paid? 450. So loan related interest is not related with the manufacturing work now. So this is indirect expenditure. Profit and loss account debit side. And before writing, observe one point. Credit side, loan from Dena Bank at the rate of 12%, 10,000 is given. So this interest on loan is related with this loan only. So 10,000 loan we have taken. On that 12% interest we have to pay. So with this loan word, he has given some percentage, this percentage indicates interest rate. So on this 10,000 loan, per annum 12% interest we have to pay. 10,000 into 12% will be 1200, no? Actually we have to pay 1200 rupees interest. But here interest on loan only 450 is given, meaning remaining amount we have to pay. That only he is clearly giving in adjustments also. See the adjustment number 4. Provide for interest payable to Dena Bank and for interest receivable on investments. Means interest payable to Dena Bank we have to calculate separately. And if any outstanding is there, that amount also we have to show in the books. That is the meaning of this sentence. So interest on loan is expenditure to the firm now, and there is no relation with manufacturing work. So this is indirect expenditure, profit and loss account debit side. So to interest on loan, how much we paid? In trial balance 450 is there now. This amount represents paid amount. So paid amount first we should write 450. And more, how much we have to pay? 750. That amount is known as outstanding. Outstanding means what? We have to pay. So current year total expenditure we should take now. In this total expenditure, paid expenditure 450 and outstanding expenditure 750. So total interest is 1200. If you want to know current year profit or loss, not only paid expenditure, outstanding expenditure also we should consider. Then only total profit or loss for current year comes. That is why not only this paid 450, outstanding 750 also we have to take here. And how this 750 comes? Show in inner column. Plus outstanding, loan amount is how much? Given here. Loan amount is 10,000. On 10,000 at the rate of 12% per annum, how much interest we should pay? 1200. But how much interest we paid? 450. So 1200 minus 450 is equal 750. So 750 is outstanding. Total interest in outer column. Paid interest 450 plus outstanding interest 750, total 1200 rupees. Actually, this 750 clearly in adjustments he is supposed to give. So interest payable 750. But indirectly is giving this in the form of percentage he is giving. So this is known as hidden adjustment. We should only identify the outstanding interest amount. Interest on loan is completed. Next, printing and stationery. So we are printing some bill books. Stationery, we are maintaining office now. So office related expenditure. For example, stationery items we bought. Say books we bought, calculator, pencil. So these two expenses are not related with the manufacturing process. Means these are indirect expenditure. So where we have to show them? Profit and loss account debit side. No adjustment. Therefore amount in outer column. To printing and stationery 1700. Next, advertisements. When we incur this expenditure, after manufacturing goods, we start selling these goods. While selling, customer should aware of our product. No, therefore we give advertisement. Means advertisement expenditure is not related with manufacturing work. Therefore, this is also indirect expenditure. Profit and loss account debit side. There is no adjustment. Therefore, 5600 directly in outer column. Next, cash with North Bank Limited means bank balance. Bank balance is an asset. It is not an expenditure. Only expenses, losses, incomes and gains we have to show in P&L account now. So don't show this item. This is balance sheet item. Ignore it. Next, investments at 9% per annum 17,500. So we invested our savings money in somewhere. For example, government bonds we bought, public limited company shares we purchased, debentures we purchased. That is the meaning of investments. So we purchased these investments for 17,500. So this is an asset to us, balance sheet item. And this percentage is what? 9% per annum. When we invest money in outside, we get interest on that now. That interest rate is 9%. So this is income to us. We are investing. So other party gives interest to us now. Interest is coming. Therefore, this is income. Income afterwards we will see in credit side. Now debit we are doing now. Furniture. So furniture is an asset. Asset is balance sheet item. Don't show in P&L account. Next, discount. Discount is of two types. Discount allowed, discount received. So debit side he gave discount. You know trial balance rules. Debit side what he gives? Expenses, losses, assets. So debit side discount means it is loss. Means discount allowed. Credit side discount means gain. Means discount received. So loss amount debit side we should show. Gain amount credit side we should show. So debit side discount 3770. Debit side of P&L account we should show. While receiving the payment amount from debtor, for early payment we allow discount now. Means this discount is not related with manufacturing work. Therefore, this is indirect loss. So P&L account debit side. Next, journal expenses. So journal expenses also indirect expenditure. So P&L account debit side. Two journal expenses 1960. Audit fees. Auditing means what? Verification of accounts. Our accountant prepared these accounts. Our accounts are to be verified by a chartered accountant. That is known as auditing. For that, chartered accountant takes some charges from us. These charges are known as audit fees. So there is no relationship between this expenditure and manufacturing work now. So this is indirect expenditure. Profit and loss account debit side. Two audit fees 350. Continuation in next page. Fire insurance premium. So to safeguard our goods from fire accident, we have taken one insurance policy. Then to insurance company, we have to pay premium. We paid 300 rupees premium. So there is no relationship with the manufacturing work now. So this is also indirect expenditure. Profit and loss account debit side. To fire insurance premium 300. Next, traveling expenditure. So this is also indirect expenditure. Profit and loss account debit side. Traveling expenses 1165. What is the difference between carriage and traveling expenses? If goods are transported, that is known as carriage. If persons are transported, then that is called traveling expenses. Next, postage and telegrams. So postage, we send letters to different parties. So for envelope covers, for England letters, for revenue stamps, we incur some expenditure now. That is called postage. Telegrams, you know. So there is no relation with the manufacturing work now. So this expenditure is also indirect expenditure. Therefore, profit and loss account debit side. Two postage and telegrams 435 rupees. Next, cash in hand. This is asset. Balance sheet item, ignore. Drawings in balance sheet we have to show. So ignore. So trial balance debit side completed. Come to credit side. Durvasulu's capital. Capital in balance sheet liability side we should show, not in credit side. So leave it. Sales. Already in trading account credit side we have completed. Ignore. Purchase returns in trading account completed. Sundry creditor balance sheet item ignore. Loan from Dena Bank balance sheet item ignore. Interest on investments. We invested our amount somewhere and on that interest came. So our main income is sales. Remaining incomes are indirect incomes. No? So indirect incomes, profit and loss account credit side we have to show. Therefore, by interest on investments. 725 we received. So 725. Why not in outer column? Because there is some adjustment. See the same fourth point. Provide for interest payable to Dena Bank and for interest receivable on investments. Regarding interest receivable, there is one adjustment. This is also hidden adjustment. See, debit side. Investments at 9% per annum, 17,500 is given. So, investments value 17,500. On that, for 1 year, 9% interest we should receive. 17,500 into 9% is equal to 1,575. So, 1,575 interest should come. But see the credit side. How much interest he gave? 725. Means difference amount is to be received. So adjustment is given. Therefore, this 725 received amount in inner column we should write. More 850 we should receive. Therefore, we have to add. So plus to be received. How this 850 came? investments value 70,500 into rate of interest 9% is equal to 1,575. 1,575 should come, but 725 came. So 1,575 minus 725, remaining amount 850 we have to receive. Therefore, to this receivable amount we should add. Then total interest for current year in outer column 1,575. So just like expenditure, in case of income also, if you want to know the current year profit or loss, not only received income to be received also we should consider. That is why income to be received of 850, we are adding to income received 725. Total in outer column. Next, discount. Credit side discount is discount received now, indirect gain. Therefore, credit side of P&L account by discount 1495. Now, not only trial balance amounts, adjustments amounts also we should consider. Adjustment amounts also we should take in P&L account. And one basic point to remember, trial balance amounts only one time we should show. So in final accounts we are preparing three things now: trading account, profit and loss account, and balance sheet. Trial balance amounts only one time they come. Some items in trading account we show, some items in profit and loss account, some items in balance sheet, but only for one time. Adjustment amounts minimum two times we have to show. One time, suppose in trading account we wrote, second time in balance sheet we should write. Otherwise, one time in profit and loss account we wrote, second time in balance sheet. Thus, minimum two times you have to show adjustment amounts. So, first adjustment is value of stock on 31st December 2013, 39,300. This is closing stock now. One time where we wrote this, trading account credit side. Second time in balance sheet it appears. So, not in profit and loss account. Ignore. Second one, purchases include furniture purchased on 30 June 2013 for 1,000 rupees. One time from purchases we have subtracted that in trading account. Second time in balance sheet we show that. Third, depreciation is to be provided on furniture at 10% per annum. So depreciation comes in profit and loss account. On debit side we have to show. Profit and loss account continuation in next page I did. See, to depreciation on furniture. Furniture is a fixed asset. So fixed asset continuously when we use, fixed asset value decreases. That is called depreciation. So this is an expenditure to us, indirect expenditure, because there is no relationship with the manufacturing work now. Therefore, profit and loss account debit side. Now, two furnitures we have. One is given in the trial balance. See, furniture as on 1st January 2013, 900. 1st January 2013 means year starting date. We are preparing final accounts on 31st December 13, year ending date. So from 1st January to 31st December, 1 year we use the furniture now, 900 worth furniture. Therefore, on this 900 worth furniture, at the rate of 10%, for 1 year we have to calculate depreciation. Therefore, months are not required. 900 into 10%, 90 rupees in inner column. Why in inner column? Because one more furniture we have. That additional furniture information is giving in the adjustments. Second adjustment, purchases include furniture purchased on 30 June 2013 for 1000. So this is additional purchase now. Furniture value 1000. When it is purchased, 30 June. Means June month is completed because 30 date he has given. Means from July we started using that. How many months we used? From July 1st 2013 to year end 31st December 13. 6 months we used. Therefore, only for 6 months we have to provide depreciation on this 1000 worth asset. So next line, 1000 into, for this 1000 also same percentage, 10 by 100 into 6 months now, 6 by 12 is equal to 50 rupees. So two depreciation amounts total in outer column 140 rupees. Next, third adjustment is completed. Fourth one already completed now. Interest on investments, interest on loan we have adjusted. Fifth point, Provide a reserve for doubtful debts at 5%. So debtors value is 12,000 rupees. Sundry debtors 12,000. Debtor means what? From them we have to receive amount. 12,000 should come. And provision for bad debts or reserve for doubtful debt means what? Amount may come, may not come. So chances are 50-50. Doubtful debts. So this doubtful debts he is asking us to provide on debtors. So this is expected loss, no? From debtors, if money is not going to come, that is loss to us. So losses we said we should show debit side. Therefore, profit and loss account debit side. Reserve for doubtful debt word he gave. So that word only we will write. Sometimes he may use other sentences also, like reserve for bad debts, provision for doubtful debt, provision for bad debts. So which words he gives, that only we use here. In this problem, reserve for doubtful debt is given. So I am writing that only, reserve for doubtful debt. 5%. On which value we should calculate? Always on debtors we have to calculate. So debtor amount is given in the trial balance now, 12,000. So 12,000 into 5% is equal to 600. Now, all adjustments also we have taken in P&L account. Finally, find out the net profit or net loss. How? Credit side, from this 29,450 we should start adding the amounts. 29,450 plus 1575 plus 1495 is equal to 32,520. Debit side, from here we should add 2,850 is the profit and loss account first amount. This amount 4,650. All these debit amounts. Continuation is in the next page now, 140 and 600. All these debit amounts also we should add. Then finally, credit side total is 32,520 and debit side total is 24,720 comes. In rough notes we have to write. So credit total is more than debit total. So credit total 32,520 minus debit total 24,720 is equal to 7,800. So debit side total is less now. Therefore this answer 7,800 debit side we should show. And for this in particulars column you have to write to net profit. Why net profit? Because credit side incomes we wrote, debit side expenses. Income total is more than expenditure total. Therefore profit comes now. Two sides highest total we should write. Credit total is more 32,520. Two sides show that amount. With this trading account, profit and loss account both are completed. Now come to balance sheet. Balance sheet we have to show in separate table now. Heading is balance sheet of Durvasulu as on 31st December 2013. So remember, for trading account, profit and loss account for the year ended, this sentence we used. But for balance sheet, we have to use as on words. Liabilities amount, assets amount. So balance sheet is not an account. Therefore, don't write DR symbol and CR symbol. And at left side, you should not start with TO2. Right side, you should not start with BY by because this is not an account. So left side liabilities amount, right side assets amount. First trial balance debit amounts we see. You know trial balance rules now. Debit side assets, expenses, losses we show. So debit side assets will be there. These assets here on asset side we should show. Stock on 1st January 2013. This is opening stock now. Trial balance amounts only one times we should show. This opening stock already in trading account debit side we wrote. Therefore don't show again in balance sheet. Ignore. Sales returns completed. Purchases, carriage inwards, rent, salaries completed. Come to this sundry debtors. Debtors means from them we have to receive money. Sundry means various. So various debtors we have. We have to receive amount from them now. Amount should come. Therefore this is an asset. So show here under asset side. Sundry debtors. If adjustment is not given, 12,000 debtor value directly in outer column we can show. But in present problem adjustment is given. Therefore 12,000 in inner column. And what is the adjustment? Fifth point. Provide reserve for doubtful debts at 5%. So provision for bad debts or reserve for doubtful debts, on debtors only we have to provide. From debtor, money may not come. Therefore, from debtors we have to subtract that minus reserve for doubtful debts. Where we have calculated this amount in profit and loss account debit side, 600 came now. That amount show here. 12,000 minus 600, remaining amount in outer column 11,400. Continuation, interest on loan. So completed. Printing and stationery advertisement completed. Come to this cash with North Bank Limited. So in bank we have 4,000 rupees cash. This is bank balance now. Bank balance is an asset. So asset side show that. Cash with North Bank Limited 4,000 rupees. Next, investments at 9% per annum 17,500. We invested amount in outside business. So investment is an asset to us. Therefore, asset side investment 17,500. See, our owner name is Durvasulu now. Durvasulu, if we invest money in his business, that is known as capital. Liability side it comes. If we invest amount in outside business, that is called investment. Asset side we should show that. Furniture as on 1st January 2013, 900 rupees. Furniture is an asset now. So furniture value in inner column because adjustment is given. Adjustment number 2. Purchases include furniture purchased on 30 June 2013 for 1000 rupees. So in trial balance in this purchase value, furniture purchase is also included. In trading account what we did, from purchases value, this furniture purchase value 1000 we have subtracted. And in balance sheet asset side, to furniture we should add this. Plus purchases 1000. Total furniture value 1900. Minus, in adjustment, depreciation is given. No? Third point, depreciation is to be provided on furniture at 10% per annum. Adjustment amounts 2 times we should show. One time where we wrote this depreciation amount, P&L account debit side. See here, 2 depreciation on furniture, 90 plus 50, 140. Second time, this depreciation in balance sheet we should show. From furniture, we have to subtract depreciation because asset value is decreasing now. Minus depreciation 140, final amount in outer column 1760. Furniture is completed. Discount, general expenses, audit fees not in balance sheet, ignore them. Continuation is in next page. Fire insurance premium, traveling expenses, postage and telegram. These 3 amounts also not in balance sheet, ignore. Cash in hand, this is an asset. Cash in hand means the cash balance in the firm 190 rupees. Asset side show that cash in hand 190. Next, drawings, not on asset side. Afterwards we'll see. So trial balance, debit amounts completed. Come to credit amounts. In trial balance credit side, liabilities, incomes, gains will be there now. We should take liabilities now. Durvasulu's capital, it is a liability, but at the end we will show. So ignore it. Sales, income, completed. Purchase returns, completed. Sundry creditor 7,500. So opposite to debtor word is creditor word. Debtor means what? From them we have to receive money. Creditor means opposite. Firm has to pay money to them. We are liable to them. Sundry means various. So various creditor 7,400. This is liability now. So show on liability side. Sundry creditor 7,400. There is no adjustment. Therefore directly amount in outer column. Loan from Dena Bank 10,000. So we have taken loan from them. This is liability now. Show under liability side. Loan from Dena Bank 10,000. Next, interest on investments, income completed, discount completed. Come to adjustments. Value of stock on 31st December 2013 was 39,300. This is closing stock now. Closing stock 2 times we should show because it is given in the adjustment. One time where we wrote trading account credit side. Second time in balance sheet asset side we should show. But at the end we should show, so ignore. Purchases include furniture purchased on 30 June 13 for 1000. We have taken this now, already completed. Depreciation is to be provided on furniture, completed. Fourth one, provide for interest payable to Dena Bank and for interest receivable on investments. These two now we have to show in the balance sheet. See, interest payable, outstanding interest. We have taken loan and on that we have to pay interest. This is liability, no? Where we calculated that in profit and loss account, debit side. See this, interest on loan paid is 450, outstanding is 750. So this 750 outstanding interest is given in the adjustment only now. The adjustment amount 2 times we should show. Therefore, second time in balance sheet under liability side you have to write this. Outstanding interest on loan 750 rupees. Next, interest on investments. In profit and loss account only credit side we have calculated. Interest on investments received amount 725, to be received 850, total 1575. So here 725 is given in the trial balance. Only for one time we should show. Here we have shown that. 850 is given in the adjustment, no? Adjustment amount 2 times. One time P&L account credit side we have added to this interest received. Second time this 850 in balance sheet we should show. Money should come, income should come, means this is asset. Therefore asset side we have to show. Interest on investments to be received 850. Fifth adjustment, provide reserve for doubtful debt. Already from debtors we have subtracted. So everything we have taken. Now finally what are left? Asset side closing stock is left. At the end show that. See, first adjustment, value of stock on 31st December 13 was 39,300. Closing stock, asset side, 39,300. So asset side everything is completed. Now come to liability side. Capital adjustment is left. See the trial balance credit side. Durvasulu's capital is 54,050 rupees. So that amount liability side we should show. Capital in inner column 54,050. Capital amount belongs to owner. In profit and loss account, net profit came 7,800. Net profit also belongs to owner. That is why net profit we should add to this capital. So 54,050 plus 7,800 is equal to 61,850. Suppose net loss came. Who should bear this net loss? Owner only. So from his capital we have to subtract. So remember, net profit we have to add to capital. Net loss we have to subtract from capital. So finally 61,850. And in trial balance debit side, at the end he is giving drawings 5,000. Drawings means what? For personal use from the firm owner withdrew money. Capital means owner brought money into the business. Drawings means from the business he withdrew the money for personal use. Therefore, drawings amount from capital we have to subtract. So minus drawings 5,000. Final amount in outer column 56,850. So everything we have taken in balance sheet. Finally, two side totals we should calculate. Liability side total is 75,000. Asset side total is 75,000. Thus, you should get equal amounts. Then only our solution is correct. So this is all about present problem. Take a screenshot of this. First, trading account. In the same table, continuation is profit and loss account. This is next page, profit and loss account continuation. So this is the end of present video. Hope this video is helpful to you. Thank you.